In 60 seconds, I explain how to invest like the ultra wealthy. Here's the thing that nobody tells you about how the ultra wealthy invests. The goal isn't what you think it is. It's not maximum returns, it's not beating the market. Above a certain number, the objective completely changes. And once you understand what that objective actually is, you'll understand why they own what they own. Clock starts now. So once net worth crosses roughly 30 to 50 million, the objective shifts completely. It is no longer about maximum returns. It becomes preserve wealth, compound it, minimize taxes, control assets, and transferred across generations. That's a fundamentally different game. And the portfolio looks completely different. Not stocks and index funds, private businesses, real estate, private equity, things they can control. And real estate sits at the center of that preservation portfolio, not because it has the highest return, but because nothing else combines cash flow, tax benefits, leverage, inflation protection, and estate planning in just a single asset. A billionaire might put $10 million in equity and control a $28 to $30 million property. They're not optimizing for return, they're optimizing for after tax compounding. And that single shift in thinking is why real estate keeps showing up in every serious wealth portfolio on the planet. So, at your level, as an accredited investor with capital to deploy, a framework is essentially the same, just scaled down. You don't need 50 million to think like this. You need to own things that produce income. You need to use leverage intelligently, and real estate is the most accessible vehicle for that. And here's a twist. Every personal finance book, every retirement account brochure tells you exactly the same thing. Diversify, spread it out, don't put too many eggs in one basket. But if you study how every single significant fortune was built, Bezos, Musk, every family office that manages real money, they all did the opposite first. They concentrated massively behind one business, one thesis, one edge. Diversification didn't build the wealth, it just protected it after. And retail investors diversify before they have anything worth protecting. That's the mistake that most people make without even knowing.